Hello everyone, this is Rachelle, and today I want to talk to you guys about how to repair your credit or build your credit or increase your credit score. By the end of this video, you will be equipped with everything you need to know, and it doesn't matter if you have no credit, if you have raggedy credit, it's okay if you have raggedy credit, or if your credit is just stagnant, just seems like you've been at the same score, you know, for years and years and years. You're doing something wrong, and I can tell you exactly what you need to do to fix it. So if you're interested in this video, continue to watch. Don't forget to like, subscribe, and share. Thank you so much for the support, and let's get right into it. Okay, now these days, guys, there's not a lot you really can do without credit at all. If you don't understand what credit is, it's just a way for them to determine whether or not you're going to be a risk or not to potential lenders and creditors. Okay, so you know, when you need a house, car loan, I don't know, personal loan, student loans, whatever like that, they want to know what you've been doing. How are you paying your bills? That's what your credit is about. When they figure all that out with their little algorithm, they will assign you a FICO score. It can be anywhere from 300 to 850, 620 and below will be considered high risk. So if you're in that category, you definitely want to pay attention. The first thing you want to do is pull your credit report. I'm going to put a link below to where you can click that. Everyone is allowed a free credit report once a year. So you want to pull it, and you want to pull it from all 3 credit bureau reporting agencies. So you want to pull it from TransUnion, Equifax, and Experian. Take a look at each one of them, okay, and go ahead and mark anything that you do not recognize. I mean, there's no sense in trying to build and paying bills that you don't owe. So if you don't recognize it, what I suggest you do is you dispute them. Each credit reporting bureau or agency will have a link on their site to where you can actually dispute a debt. So make sure that you do that. It's up to the creditor to prove within 30 days that that debt is yours, otherwise it falls off, and that's an immediate increase in your credit score. Check back in 30 days to make sure that it has dropped off, and take a look at your score and see what you got. Now that you know exactly what you need to be working on, what I suggest you do is you highlight any negative activity, because that's the stuff that's affecting your credit score and bringing it down further. And what I mean would be the collection accounts, if you have any, and the slow pays on like credit cards, like cards where you've paid late, 30 days, 90 days, stuff like. If you have that, you want to take a look at it and see what we have to work with. I'm going to suggest starting with the collection accounts, because they're going to affect your FICO score more negatively than anything else, really. It depends on the type of account too and the age of the account, but anyway, let's start with collections. I would say the older the collection account, okay, the least it's going to affect your credit. The only exception to that rule, in my opinion, would be tax liens and student loans. If you have that on there, you really want to get that off fast, because that is killing your credit score. Regarding paying your collection accounts, here's the thing. Before you pay a dime on any collection account, guys, make sure that you get the terms in writing. So if you, also let me tell you about settling. Let's talk about the payments first. So if you make a payment, make sure you have that in writing that, okay, once I make this payment, everything will be settled and this account is free and clear. Now, like I said, they're not going to delete it or remove it from your credit account just because you paid it. It's still there. Like I said, they are 7 years from the date of the original delinquency, but it will show as paid, and that will help a little bit. I just felt like I was just all out of frame. I don't know why I was on that side. Anyway, now regarding settlement accounts, okay, you know, all right, here's the thing. You might not be liable right then for that money that you owe, but what happens is a lot of time with the credit accounts, they will allow you to pay a settlement. You pay the settlement, you think you're done, your account is updated, the account is settled, you think it's over with. That next tax season, they can add the remaining debt that you didn't pay onto your taxable income, and you have to pay taxes on that. So like I said, when you are talking to these collection people, check and see what the terms are, and, you know, figure out what's in your best interest to do. If that's something that, you know, you're okay with, fine. Also, in the credit reporting bureau's agency's eyes, when they see a settled debt, it doesn't say paid debt. It's still negative. It's not really helping your account. So what you want to do is correlate the original credit card information with the collection information, okay? Because sometimes the collection information, it doesn't have the payment history there, and the original date of delinquency on that credit account, the original credit account, the JCPenney account, all right, it'll be 7 years from the time you were late, that first time you were late, until the time that it will fall off. And that will be that account, and that will be your collection account. So like I said, the older accounts, if you're nearing that 7-year point, and you know, suppose it's a high balance or whatever, and like I said, they're older, they don't affect your account that much. Unless you're trying to get new credit and they require you to pay that off, in some instances it might be better just to leave it on and let it fall off, okay? But there are different time frames for each type of debt. So let me break that down to you just so that you know I had to write this down. It's a lot of them, okay? All right, so it'll be 7 years from the original delinquency date for a typical collection account like medical bills and stuff like that and credit card bills. 15 years from the filing date, okay, for an unpaid tax lien, and it's 7 years for a paid tax lien. Foreclosures are 7 years from the original delinquency date, but I know they're bad. I mean, you know, it's a negative item. But I have read that in as little as 2 years after having a foreclosure, your credit score can improve. So I don't know whether they just changed that because of the housing crisis that went on a few years back. But so that's not so bad. So if you have that and it's been past 2 years, you might want to focus on something else for now. For a Chapter 13 bankruptcy, it's 7 years from the filing date, and for a Chapter 7 bankruptcy, it's going to be 10 years that it'll fall off from the filing date. Now, if you have filed bankruptcy, it doesn't erase your credit debt. It doesn't erase all those other accounts that are kind of negative, that are negative. They're still there and they're still reporting, but again, it'll read that it's a part of your bankruptcy, but it's still a credit account. So it'll be 7 years from the original delinquency date of that account for that to fall off. Now for student loans, okay, again, this is a federal debt. Usually once they're paid in full, once they're paid in full, it'll be 7 years from that time. Okay, so like I said, the federal debt is not a game. You want to get that off as soon as you can. You understand collections, you want to make sure that you're paying the major ones off first if you can, like the tax liens and stuff like that. Sometimes you just can't. So I mean, if you have something recent, focus on that, get that down. I would start with the smaller balances first. That way you'll have less to deal with. Like I said, the older ones, you know, if they're nearing their deletion date, in my opinion, let them fall off. Okay, now those are for all your collection accounts. If you have any questions, I missed anything, let me know and I will research it and find it if I didn't mention it in this video. Okay, so now dealing with your actual credit card accounts, all right? Right, them credit card accounts are the game. Okay, so suppose you have, well, first of all, let me give you the basics to how to handle your credit card accounts. Whatever your limit is on your credit card, you really don't want to exceed 30% of it. Really at any point during your time with the card while you have the account open, but you don't want to exceed 30% of it because that's making it seem like you're overextending yourself. However, if it comes that you need your money and you have to spend it, then go ahead and spend it, but 2 days, at least 2 days before your statement closing period, you pay it all off. That way it won't report as a high balance. Because if it reports as a high balance, it looks like you're scrambling and you're just using up all your credit, and that's going to affect your credit score as well. These little things, month to month, will affect your credit score. So, like I said, make sure you're under 30% at all times, and if you can't, and you have to go over a little bit, just make sure you pay it off 2 days before your statement cycle date. So check your statement on your credit card to figure out what that date is. Also, it's preferred that you pay your balances off every month. Okay, so it's preferred that you do that, but like I said, if you can't do it, at least 30%, no higher than 30%. So example, you had $1,000, a $1,000 credit account, right? Credit card. Don't spend over $300. You really have a $300 credit card. Okay, so that's how much you need to spend. If you find that your balances are getting too high, what you can do, I mean, if your account is in good standing, you can call your creditor and see if they'll allow you a credit increase. That way the ratio will be a little bit better. Another thing you can do is check around with the rest of your credit cards and see if there are any balance transfer offers where you can transfer balances from a higher account that's over that 30% and put it over to an account that may not have something like that. That may, have no balance or a lesser balance with the higher credit limits. Before you have any of that done, ask your creditor if this is going to be a soft or a hard pull. And basically it's just an inquiry. It's an inquiry type. The soft pulls are what you want, okay? And those do not affect your credit score because we're trying to build. We don't want anything messing it up. All right, and those would be like, when you're trying to get a job and your employer has to check your credit. I mean, you need credit for everything, utilities, all that kind of stuff, right? That's what a soft pull would do, and it doesn't affect your credit. However, it does stay on your credit report for 2 years. Both the types do. Now, for a hard pull, it does affect your credit, especially if your credit is poor. Okay, and what I mean high risk. So if you're in that category and they have to pull your credit for that, it's going to remove points from your already low credit score. So you might not want to do that. That stays on for 2 years as well. And like I said, typically that's done when you're trying to get some credit. Somebody's going to give you a credit card, car loan, stuff like that. Oh yeah, speaking of that. There's certain types of hard pulls that even if you have to do them multiple times, as long as they're done within a certain time frame, I think it's anywhere from 2 weeks to 30 days, it only counts it as one. So there will be, I believe, like installment loans, like a mortgage, a car loan, student loans when you're shopping around. So when you're doing stuff like that, make sure you're doing it all in the same time frame. Okay, now I've heard that it can extend all the way out to 45 days, but I wouldn't take that chance. You know, I'd stay within at least 2 weeks, okay, within a 2-week window. And like I say, it won't affect your credit if that's something that you need. So anyway, before you have your creditors do anything, you want to check and make sure it's a soft pull and not a hard pull. So now that everything has been leveled out and you know what you have to work with, you've done the best you can, I would focus on the accounts that are closer to the 30% utilization rate, that are over it a little bit, and the ones that are closer to it, pay those down and get them at the 30. Okay, I would suggest doing that even before paying one off, okay, because you'll have more than one at 30. And the ones that you actually can pay out, fine, go ahead and pay them off, and you should see your credit score increase. None of this stuff is going to be overnight. Guys, the only thing that you're going to see an immediate increase in is if something drops off of your credit. So those dispute items, you know, if they deem that it is not your account, they made a mistake, or they just don't follow up, it automatically gets dropped off. Or like when a derogatory account like collections would drop off your credit account. So it's basically what you're going to do with your credit cards. Keep the utilization under 30% or pay it off. And make sure you are paying on time. Make sure you are paying on time. That's super important, I know. But you do that for about 6 months and then call your creditor again and see if you can get an increase. And that's going to further reduce your credit to balance ratio. Do not stop there. Every 6 months you want to do that. Now you don't want to have, like, you know, too much credit everywhere. I mean, you know, just a few credit accounts, okay? So if you have a whole lot out there, you probably want to close some of them, not the older ones. Keep the older ones as long as you can. But if you have stuff that you're not using, I mean, you don't want to seem like you're just overextended. That can actually hurt your credit score. I don't know if you knew that, but I didn't know that either. But yeah, so, you know, you don't need a lot, but you do want to diversify the types of accounts you have. So, you know, like an installment loan, a mortgage, you know, mortgage loan, car loan, you know, credit card, you know, bank card, stuff like that. Okay, you want to diversify. That way the creditors will rate you on having all these different types of accounts and being able to handle those as well. Okay, so overall, guys, the main things you want to do is you want to take care of the collection accounts first. The oldest ones, I mean, you know, you decide what you want to do with those. They don't affect your credit that much. The newer ones you definitely want to target because they're pulling your credit score down the heaviest, excuse me. Any type of delinquent federal debt is huge. So you want to put some effort toward getting that down, okay? As far as your credit accounts, your open credit accounts and stuff like that, you want to make sure they're staying beneath 30%. Make sure you're making your payments on time. If you find that you have to go above the 30% at any point, just make sure you pay it all down, or at least to the 30% range 2 days before your statement cycle closing date, again, because that is what's going to report to the credit bureau. So you don't want to look like you got high credit utilization. And every 6 months, contact your creditor, see what you can get, see what they can do for you. And every year, pull your credit and check it and make sure everything is all right. If you want to get like a credit monitoring thing, I mean, I guess you can. I mean, sometimes they come with the credit cards that you already have. Just check. What about those of us who don't have any credit at all? Well, there are a couple of things you can do. Okay, the first thing I suggest that you do, if you have anyone that you're very close to, your mom, dad, family members that who are great with their credit, ask them if they will add you as an authorized user on one of their credit cards. And basically that reports on your credit account, and it makes it seem like you're paying the bills not instead of them, but you're paying it too, okay? Just to sweeten the deal, tell them you don't even need a card, okay? And that way it's just helping you. Over time, you'll probably start to get offers and stuff coming in, and then you can apply as normal as you need to. Remember, don't apply to a lot of things at one time. Only apply to one, okay, one card, you know, at a time. You don't want to further decrease your credit score. Look for pre-approved. If something says pre-approved, pretty much you're in there, all right? But check for that. Also, make sure you're looking at the interest rates. You're understanding what that is. With newer credit, they'll probably start you at like 20%, something like that. It's horrible. But sometimes you have to just take it just to establish the credit. If you don't have that, you can open a secured credit card. And basically that means you are using money that you already have as collateral for a credit card. So it's basically like a savings account. All right, so you can go to one of your banks and ask for that. There's really no risk involved for them because you're giving them the money, and then you use it just like that. Just like I told you, you don't go over 30% of what that is. So if you got a $200 secured account, you're just starting out. You don't need a big, you don't need a black card. $200 secured account. You don't want to go over what? $30. No, is that right? 10. No, 20, $60. I'm sorry. You don't want to go over $60 of that account, okay, at any point. Like I said, if you happen to do it, make sure 2 days before your statement closing date, you pay it all off. And in 6 months, call them and check and see if you are applicable for a unsecured account. And that way they'll return your money and then you have a real credit card. And sometimes it takes a little bit longer. That's fine. Wait 6 more months and then ask them again. So hopefully this will help you in some of your your business ventures and ideas and stuff you want to do. This is a part of it. Your credit will come into play with getting this done. It's better just to start it off now. Like I said, it's not going to be quick. But over the course of a couple years, you're going to be right where you need to be. So, questions, comments, concerns, leave them below. Thank you for watching. Please don't forget to like, subscribe, and share. I will see you guys next Thursday. And y'all have a great day. I'll talk to you later. Bye.